All right, we're going to go over the Liquidity Grab Trader 1 and 2. I have the PDF done for you guys. We'll get this to you guys after the conference call on the members download page. All right, so let's go. So we're going to look over the Liquidity Grab 1 and we're going to look over Liquidity Grab 2 this morning. I'm going to run market replay to around 8:25. We have non-farm payrolls coming out. So let's get this started here this morning. I'll start playing it right now. So what you're looking at is you're looking at the Liquidity Grab 2. I'll show the Liquidity Grab 2 today. That takes the first liquidity grab after a V top or V bottom with overall trend direction. Now on your far left chart, I have it trading 6 contracts. And on the far right chart, I have it trading 1 contract. So you have versatility with the software where you can trade it from 1 to 6 contracts. If you do the micros, you can trade it as many contracts as you want. Just add the software in multiple times. You can change it to 8 contracts, 9, 12, 15, 20, 30, all the way down to 1. So it's whatever you decide you want to do. I want to show how 1 contract with the same exact Renko bar type versus 6 contracts, because whether you trade the large contract or you trade the micros, you can adjust this to your trading style. And I think that's very important for traders to understand. The one thing that I wanted to do with this software is provide a lot of versatility to manage risk. The one thing you're going to understand also in the PDF, hey Venkat, good morning. The one thing you got to understand is I went with a maximum 5-to-1 reward to risk ratio. I'm sorry, risk to reward, meaning you're not going to risk more than 5 to get to 1. The reason I did that, when I finished the software on LG1 and LG2, now this is, like I said, LG2 I'm running this morning. You'll want to put LG1 and 2, and I showed you how to do the PDF beside each other and run it all through. We're on the January contract right now. That's what we have time for this morning. We'll run it for about 25 minutes this morning on all these trades. This is taking trades 24 hours a day, every single trade. And so, and then what you can do when you get the software, you can go to the December contract and back test it 60 days, 90 days, whatever you want to do. But I show you how to do that in the PDF. The reason I did, I went with to make sure that not only we could do the number of contracts you want to do, the difference in this strategy from all the other strategies is the reward to risk, or I call it the risk to reward. Because a lot of you guys, what I've learned over the years, use evaluation accounts, funded accounts through different prop firms. Some of you use Apex, some of you guys use Top Step, and some of you guys use other funded accounts. I wanted to show how using this strategy can be traded into funded accounts like that. So if you're going to trade a funded account, or you're trying to get an evaluation account to get a funded account, or even your own account, you have to reduce risk. But they have certain guidelines. The 3 top guidelines are you must first have a good risk to reward. In other words, you can't risk more than 5 to get to 1. In other words, you can't, if you're doing 10 contracts, 10 ticks is your first target, you can't risk more than 50 ticks on a stop. If you do 5 ticks as your first contract, you can't risk more than 25 ticks on your first stop. If you do 1 tick and a scalp, you can't do more than 5 ticks as your stop. So that's one thing a lot of the prop firms have went to. The other thing is a trailing drawdown. That when I passed the 50,000 and the 150,000 K, which I'll show you in a second, with this LG1, LG2, with those in mind. I go over this in the PDF, and I'm going to show you 3 ways if you're going to try to pass an evaluation account or in your own account, how there's 3 characteristics to do this, are 3 main things that I took away from programming this system. Is one is you got to have the reward to risk. The risk to reward's got to be there, at least 5-to-1, and then it can be better than that, but you can't go higher than that if you're going to pass a funded account or an evaluation account, and so on. And then 2 is that, you got to be consistent in your approach. You can't be, with these longer Renko charts I'm showing you now, you don't have to turn them on, turn them off. If you're using smaller Renko sizes, there's 2 ways to do the system. You can trade the smaller Renko sizes like a lot of, we send charts all the time like a lot of members do. They trade off my 120. It's a 20 tick maximum stop on the account, and we try to get liquidity grabs. You've seen a lot of traders doing well with that. What they're doing is they're manually going in and they're turning the system on by double clicking it and letting it get their entry, their stop, and their exit for them after a qualified V top and V bottom has happened. Why that is important on smaller Renko charts is that the trade's already qualified. I have a dual trend filter that we have in the trade room using our proprietary Renko bar type, and then also the Uni Renko bar type that we tested for 30 years on the S&P. We went back 30 years, tested the best trend. So we got that down. We know it's the best zones to look for trends. So if the trend is red, we're looking to short. If the trend is green, we're looking to buy. And then what we do is we look for a V bottom, V top, and then you can toggle on this liquidity grab trader 1 and 2 or 2 to enter your trades, to get your stop out. To stop out if it's wrong, and then to get your targets. So that's one way to do it, is you trade off those Renko sizes. We'll do that with non-farm payrolls this morning. I'll show you how that works on smaller Renko charts coming up. We were doing that live a couple days ago. I went through all the trades live on Wednesday, and we had 7 in a row that worked off the small Renko charts just by using it as an order management system, and it worked very, very well. I was calling them out as they produced to the members in the live room. So that's off a smaller Renko. Now, for you traders that don't want to turn this thing on and off and manage it with smaller Renkos, you can go to larger Renko size. I have the exact settings that you are getting, that you're seeing right here on the S&P. So you will get this on the S&P. These are 2 larger Renko sizes. Do I have a larger than a 5-to-1 risk to reward? No. When you do any of these contracts with this, the difference in this strategy versus past strategies is you had to have either a real small stop and turn it on, turn it off, or you can never trade the larger Renko sizes without a larger stop. With liquidity grabs, we don't have to have that. We have a good reward to risk ratio. So if we look at these trades going right now, the difference and you'll see this, the difference in a larger Renko size, you just don't have a lot of liquidity grabs. You can see liquidity grab there. We have liquidity grab here. You just don't get a lot of liquidity grabs with my Renko size, with my LG2, producing these trades. So as you watch this trade, this is 6 contracts, okay? And then I've got my first contracts coming off at this level, and then I got break even +1, and then I have this all in the PDF for you on exact targets and everything that I'm running here this morning. So if you look over here on this other side, it's just 1 contract. Now this is the big contract that we're trading. So when you see this, realize if you're looking at trading the micros on 6 contracts or 1 contract, just take 1/10 of this profit and loss that shows up the top. So if you were doing 1/10 of 10,000 or 800 here on the big contract on 6 contracts on the micros, obviously that would be almost $1,100. It'd be 150 on the 1 contract. So you can see that you notice the larger contracts, though, on the larger Renko sizes that I provide for the S&P, we just don't get a lot of liquidity grabs. Why is that an advantage? So there's an advantage and disadvantage on trading smaller and larger Renkos. Let's go over the smaller Renko first that we do in the live trading room. The advantage on the smaller Renko size is smaller stops. You get a 20 tick stop on a 20 Renko size bar. The disadvantage is there's a lot of noise. It's up and down, up and down, up and down, up and down, up and down. It's a seesaw, especially if you trade the NASDAQ futures and so on. So that's the advantage versus disadvantage. The advantage on the larger Renko, like you see, that I smooth this out with these Renko sizes and my trend filter, is you just get some nice trends. They are smooth, very, very smooth trends, and it just doesn't get a lot of liquidity grabs. The reason it doesn't get a lot of liquidity grabs is that it's just a larger Renko and you're not getting distortion in prices. Where a large Renko size, you still got to have a good reward to risk ratio though. Because if you don't have a good reward or risk to reward ratio, then you're not going to pass an evaluation account. I wouldn't have passed a 150,000 valuation account. You got to make 9,000 in profit to pass the valuation account on the 150. And you have a drawdown. You can't have a certain drawdown on that account of 5,000. Where if you look at a $50,000 account, you can't trade the same number of contracts. You can't trade the same number of contracts you do on a 50 versus 150, because if you do it 150 or 50, then you can't trade 6 max contracts on the large contract. Why? If you have 1 or 2 losers, that can knock you out of your $2,500 trailing drawdown. So I go this in the PDF. I go how you can contract size. That's another big thing I'm passing these evaluation accounts, or even in your own trading. Contract size is everything. The one thing I learned right away when I programmed this is that when you contract size, my rule of thumb is 1/3. If, let's say you sign up for a $50,000 Apex account or a Top Step account, and the Top Step is different, and it looks at the amount of total drawdown. So if you do an X amount account, it's a $2,000 drawdown or a $3,000 drawdown, and then they liquidate your account. Or on Apex, let's say if you do the 50,000, it's a $2,500 threshold. That based upon your highest threshold value, and it trails that. So whatever your highest threshold value is, if it goes below 2,500, they liquidate your account. So if you don't have good risk to reward, you're not going to pass those accounts. So that's the one thing that was neat about me programming the system is I use the evaluation accounts to help program the overall and tweak the systems, because 3 main things, like I said. Number 1, contract size. If you're doing a 150 evaluation account, you can't be doing, if you do a 50,000, I'm sorry, you can't be doing a 6 contract full contract. One or 2 big losses could knock you out of the system, right? Where if you do 150, 6 big contracts, it can sway that drawdown will be suffice. So you can use the micros to help you manage that also. But I took that into, that's one thing I learned that I'm going to help you traders out with. Contract size is key. The second is consistency. The same stops, the same targets, the same entries. You'll notice that I'm running this without touching it. This is running 24 hours a day. The market's only open 24 hours a day, but closes 5 to 6 Eastern. But you can tell the consistency is the key if you're trading larger Renko sizes. Hey, good morning, Aaron. So the larger Renko sizes, it's the consistency of the larger Renko sizes that help you with that, of getting the consistent part. And then also the third component is the reward or risk to reward. Those are the 3 main components that you're going to find out when you get this in your hands. If you want to, with your own account, or if you're looking to trade, through Apex or Top Step or any of these funded accounts. Now we have no affiliation with Top Step. We don't partner with them or Apex, but it's a great way for me to program the system knowing really great money management rules. Because in order to pass those type of evaluation accounts, you got to stick to those rules. They have daily drawdown thresholds. You got, you not only have that, you have your consistency rule. You have the reward to risk. So when this was passed, and I'll get this PDF out to all you guys. So when this was passed, this 50,000 account, you don't want to trade the same contracts as you would trade the $150,000 account. So the one thing that I'm going to educate you guys about, and that's why I put this in here, and I go over this in great detail in the PDF. I have a PDF that's done, and I go in great detail. I got all the settings for you. I go in great detail, a lot of charts. I go from point A to point B, all of them right from the get-go. I tell you how to trade the small Renko charts. I show you how to trade the large Renko charts. I give the settings. I don't hold anything back in this PDF. So everything is from top to bottom. Go over the dual trend filter, top to bottom, how to trade the live room, or how to even trade the larger Renko sizes. So that will be on the members download page after we get off this conference call. Gerald will set that up for you guys, and you guys can review that over the weekend and so on. When you get the software, here's the best thing to do. Okay, you're going to have the LG1 and LG2. Now I'm showing the LG2. The LG2 only takes the first liquidity grab after a trend change. So here was the trend change. Here's the first liquidity grab, trend change, first liquidity grab. Okay, so it's only taking the first liquidity grab after the trend change. Here, put this up here so you know where it's going. First liquidity grab after the trend change. So we're going to run this to 1.8 on yesterday. So this is taking all the days on the contract rollover when the contract rolled over, 12:30 to 1.8. I didn't include Christmas because it was closed. So 12:30, I'm taking 24-hour session, playing the LG1 on a Renko size that I have in the PDF for you on the ES. I test it for you. And then also I have it trading one contract, so you can see the difference on one contract versus the 6 contracts. Now, like I said, you can adjust your contracts to fit to your own parameters, which is very simple. If you're doing micros, which you're doing a lot more contracts than the standard contract, just put the strategy in a couple times. So let's say you want to do 9 contracts. Enter the strategy in twice. Let the default get you in, put the same settings that you want in, or you can emulate the ones I have in the PDF, which is fine. And then you can put another strategy in the same strategy, and then go to order handling under the strategy, and put in 3 contracts instead of 6. Now you're doing 9 contracts, right? So you can fit to what you want. You can go as many contracts as you want, and all the way down to less contracts as you want. The difference between LG1 and LG2, I'm showing you LG2 only today. This is taking the first liquidity grab after a trend change. I do have a filter built in, which I put in the PDF, that you want to toggle the switch on and leave it on. But the difference between the LG1 and LG2, LG1 takes all liquidity grabs. So what it will do, it'll keep taking liquidity grab and liquidity grab. Like it will take this one, and then it'll take this one. It'll keep taking all liquidity grabs. Any distortion in price, the software knows that's a possible buy order block or sell order block, and that's where the counter trend traders are getting knocked out of the market, only to resume trend, and it will get long or short with that. It's the software is programmed to do that for you automatically. The difference between LG1 and LG2, LG1 takes all liquidity grabs. LG2, which I'm showing you today, these results up here, is only taking the first liquidity grab after a trend change. Now listen, this is educational software, right? So past performance is not indicative of future results. We're not saying, hey, we guarantee you're going to make $18,000 or $3,000. This is past results are not indicative of future results. What this is showing you, and me showing you that these strategies were passed in a 50 and 150,000 valuation account, it shows you the consistency of the program. It also shows you that you can use different Renko sizes, whether you, let's say you don't want to, right here, it's running around the clock. You know, you don't get a lot of liquidity grabs on this exact setting I give you in the PDF, and you can tweak those also, guys. You know, you can tweak this as much as you want, but I got a 5-to-1 risk to reward on this. It's not like you're risking a 10-to-1. You're risking 100 ticks, right? You know, to make 10 ticks. We're not doing that. You know, I'm showing you the maximum amount when you do this, and I'll show you how to do this in PDF, is about the you know, risk to reward. That's the biggest advantage of doing this. That's going to help you get through these evaluation accounts. That's going to help you get, if you want to get funded, if you consistently do 3 rules that I found that work quite well from me, you know, doing the evaluation accounts with the software after it's programmed. And it's very important. Just think of 3 things: contract size. You know, if you can do 10 max contracts, what they allow you to do in a $50,000 account, you should be doing 3 contracts max on the big contract. If you can do 20 contracts, you know, 20 on the $150,000 account, then you should be doing 6 contracts. Where traders tend to fail in evaluation accounts, they go all the way. If I'm allowed to do 12 contracts, I'm doing 12 contracts. Or they'll be like, well, I'm allowed to do 10 contracts. Let me just do 8 to give me room to wiggle. That's not room to wiggle. right? You need to do 3. It's usually 33%, and that's what they don't tell you, educate you about, because obviously, that's not going to go over your money management, but that's good money management skills. 33% of the max contract is typically a great starting point for you. That's what I did to pass both evaluation accounts, was 33%. 6 contracts on the 150, 3 contracts or less on the 50. So, whether you trade your own account or you're using this for other purposes, or if you're using it for evaluation accounts, that's a rule of thumb. Now, I go over all this in the PDF. I don't leave anything out. I'm pretty excited about this because it not only fits, you can have it to fit your risk parameters. You can use it for smaller Rinko sizes if you want smaller stops, or larger Rinko sizes. It's totally up to you. Now, I'm going to give you what I'm showing you right now. Right here, right now, I'm going to give you these settings in the PDF. Now, you can tweak those as much as you want. If you want a higher reward to risk than 5-to-1, right, or risk to reward, I'm sorry, then you can tweak it and you can test it. What I educate traders to do is this once you get it. The contract rollover on the big contract was January, right? Right before Christmas. I believe it was 12/20. 12/20. Well, you don't want to take 12/20. Well, you can if you want to, but there's just no action. 12/20 to 12/30, that 10-day period of Christmas time. But you can still do that also. But the best way to do is look where the volume is. 12/30 to yesterday. All right. And yesterday is closed because the morning of Jimmy Carter, so I don't have 9 on here. So I went all the way from the contract roller 12/30 to 1/8. Go to the one thing with Rinko bars you must do, market replay. You cannot go on Strategy Analyzer. You can't just click on the chart and look at historical data. Why? And I go this in the PDF because Rinko charts have artificial opens, right? It's going to give you inaccurate data. It's going to look like it's the best thing since sliced bread, right? You can't do that. You must use market replay when you're analyzing these charts on any type of market that you want. And I go this in the PDF. Market replay like this will give you, it will show you what live trading will look like, and if whatever market you're looking at, if that Rinko size is conducive to a winning trading program according to your risk tolerance. So I simply it's very simple when I'm giving this to you on the S&P. The S&P is one of the highest volume traded instruments in the whole world on the futures, S&P futures, right? You're not trading natural gas, or you're not trading heating oil. You're not trading, something that's very illiquid sometimes. This is a very liquid market. So, traders ask, well, why are you giving these settings out? Because with these Rinko sizes, it's endless. You can fit these Rinko sizes. Once I show you how to do this on the larger Rinko sizes, like I'm showing you now, the combinations are endless on the Uni Rinko. As long as you use the parameters I talk about, the contract size, the risk to reward, and the consistency approach. The consistency says this: you don't want to change this every day and change your stop, change your entry, and change the entry will be the same because you're using the LG1 or LG2, but you don't want to change it every single day, your strategy. And you want to be consistent about the approach. And that's what this can do. It can be consistent about the approach, use the same stops, the same entry, and so on. Now, once you set that up, like I said, once you set that up, all right, once you set that up, what you can do is I would set up the, I would market replay 12/30 to 1/8, and then I'd replay your December contract, 12/24, and go back to December and use the same exact settings. But on one chart, I put LG1, and the other chart, I put LG2. All right, so if I go into here and I hit real time, let's just take a look at these setups. So this has been running real time. Look at the trades. Remember, past performance not indicative of future results, guys. Don't get caught up in all these numbers. These are just numbers. You can see the consistency on a liquidity grab trader, though, on a longer Rinko size. That is consistent results. So you can even go to the November contract. We don't have time today, and do the same thing with the same exact setup. Now remember, this is educational software. We're not saying, hey, you're going to make this number, right? You know, trading, I mean, live educational rooms wouldn't be around. They wouldn't let us stay open if we said, hey, this is what you're going to make. You know, that's not about that. It's about showing the consistency of the program and of the results of using the liquidity grab trader. You know, so this is LG2 that I ran today. You know, you guys will get the PDF out to the members download page, and it is from top to bottom. I got this thing from all the way to the beginning of not knowing anything about anything, you know, to about the system, all the way down, and I go in great detail, great detail, all the way down. You know, I give chart examples. I give everything right in a row, and then all the way down the bottom, you know, I go the difference between your number of contract size, your consistency rule, just what I went over today, your reward to risk. I go over the advantages and disadvantages of a larger and smaller Renko bar, and then I go over exact settings, you know, for you guys, and so on. And then that's at the bottom of the PDF where you guys can go there. This is the thing about it. You don't want to run this strategy through news, guys. We've got news coming out here in 3 minutes. I'll get this off. Sure, we'll shut this off in a second. Go to forexfactory.com. Look for the red impact numbers. Just go to the little funnel. Look for the red impact numbers. Let me show you real quick. And you don't want to run this through. Now, some of you will want to trade the larger Renko size through it, and that's fine if that's what you want to do. Smaller Renko sizes should never be ran through it, but go to Forex Factory. It's free. You can see Friday, January 10th, we got a big news event, the largest news event of the month at 8:30 coming out in a couple minutes. You want to wait till about 3 to 4 minutes after news, and then you want to start looking for V-top, V-bottoms, and you could trade you can trade the smaller Renko size, right, and toggle it on, toggle it off after V-bottom, V-top, which I went over all those trades with you on Wednesday. We had 7 in a row that worked out for us, and then and let it manage your trade for you. Or you can let it trade the larger Renko sizes after the news, and you can let it run like on a Renko size like this, and just let it run all day, 9:30 to 4 or 9:30 to 11, whatever you guys want to do. Okay.